Okay, recording na tayo. So, ang topic natin for today is stock valuation. Stocks and their valuation. Okay? Makikita nyo to sa chapter 10 ng ebook natin. Ayan. So, basahin lang natin yung contents ng chapter na to. Ayan, chapter introduction. Legal rights and privileges of common stockholders. Types of common stock. Stock price versus intrinsic value. The discounted dividend model. Constant growth stocks. Valuing non-constant growth stocks. Ito, enterprise-based approach to valuation. Pero ito, next meeting na lang, no? From 10-7. Next meeting natin discuss together with some, practice problems. So, ang goal natin for today, hanggang dito muna. Ayan, sa 10-6, no? Try natin hanggang 10-6. Okay, yun nga. Expect mo, may mga formulas ka ulit na isusulat dito na mas maganda kung kabisaduhin mo. Okay. Para kapag face-to-face na, hindi ka mahirapan mag-memorize. Okay. Ayan. So, basahin natin muna tong putting things in perspective. Ayan. In chapter 9, we examine bonds and their valuation. Yun yung topic natin last week, no? And last week din, bond valuation. We now turn to stocks, both common and preferred. Because the cash flows provided by bonds are set by contract, it is generally easy to predict their cash flows. Okay. Preferred stock dividends are also set by contract, which makes them similar to bonds. Okay. Sa bandang dulo ng chapter na to, magkakaroon tayo ng discussion ng kung paano ba i-value yung preferred stocks. Pero yun nga, similar lang sa bonds halos, ano. However, common stock dividends are not contractual. They depend on the firm's earnings, which in turn depend on many random factors, making their valuation more difficult. Two fairly straightforward models are used to estimate stocks' intrinsic or true values. Yan nga, yung nakita natin sa table of contents kanina, no? Discounted dividend model. Okay, and the corporate valuation model. Okay, so ang goal nga muna natin for today, dito muna tayo sa discounted dividend model. Okay. Ayan. Tapos next meeting, tuloy natin corporate valuation model, tapos practice problems. Okay, more practice problems. Ayan, a stock should, of course, be bought if its price is less than its estimated intrinsic value. Okay. And sold if its price exceeds its intrinsic value. So, mamaya pupuntahan natin ano ba yung pinagkaiba niyan no market value and no intrinsic value. Okay, ito yung learning objectives for this chapter. By the time you finish this chapter, you should be able to discuss the legal rights of stockholders. Ito, recap lang. Alam mo na yan. Okay, basic accounting to, no? Legal rights of stockholders. Explain the distinction between a stock's price and its intrinsic value. Yun nga. Ano ba yung pinagkaiba ng dalawa na yan? Pero, na-discuss na natin to nung financial management natin, no? Okay. Nung second sem nung last school year. Next, identify the two models that can be used to estimate a stock's intrinsic value. Yun nga, yung dalawa. Discounted dividend model and corporate valuation model. Then last, list the key characteristics of preferred stock and describe how to estimate the value of preferred stock. Okay. Ayan. So, stock valuation is interesting in its own right, but you also need to understand valuation when estimating a firm's cost of capital for use in its capital budgeting analysis, which is probably a firm's most important task. Okay. So, puntahan na natin dito yung unang part, no? Legal rights and privileges of common stockholders. Again, pinag-aralan mo na to. Basic accounting pa lang. Ayan. A corporation's common stockholders are the owners of the corporation, and as such, they have certain rights and privileges discussed in this section. Ayan. Control of the firm. Ito, babasahin lang natin to halos. A firm's common stockholders have the right to elect its directors, who in turn elect the officers who manage the business. Ayan, alam mo na nga yan, nagkakaroon ng election kasi may may yung bawat stocks may kasamang voting rights. Okay? Then yun, in-exercise yan sa pagboto ng directors. Okay. Yan. Basahin na lang din natin. State and federal laws stipulate how stockholder control is to be exercised. First, corporations must hold elections of directors periodically, usually once a year, with the vote taken at the annual meeting. Each share of stock has one vote. Thus, the owner of 1,000 shares has 1,000 votes for each director. Okay. So, medyo theory part pa tayo, no? Yun nga. And yan. Stockholders can appear at the annual meeting and vote in person, but typically, they transfer their right to vote to another person by means of a proxy. Ito, tandaan mo na lang, baka sakaling matanong. Proxy is a document giving one person the authority to act for another. Okay, yung proxy daw, yun yung document. Okay. Na nagbibigay ng authority. Okay. Ito, management always solicits stockholders' proxies and usually receives them. However, if earnings are poor and stockholders are dissatisfied, an outside group may solicit the proxies in an effort to overthrow management and take control of the business. This is known as a proxy fight. Again, tandaan mo na lang din to. Proxy fight, an attempt by a person or group to gain control of a firm by getting its stockholders to grant that person or group the authority to vote its shares to replace the current management. Okay. And ito pa, tandaan mo na lang din to, takeovers o yung hostile takeovers. An action whereby a person or group succeeds in ousting a firm's management and taking control of the company. Okay. And then yan, nagbigay na example. Pwede naman nating skip na yan. Ayan. Tapos ito, managers without more than 50% of their firm stock are very concerned about the proxy fights and takeovers. And many of them have attempted to obtain stockholder approval for changes in their corporate charters that would make takeovers more difficult. Ayan. So ito yung mga example ng mga ginawa na companies para maiwasan yung takeovers. Yan. To elect only 1/3 of directors each year. Okay. Or to require 75% of the stockholders rather than 50 to approve a merger. And yan. To vote in a poison pill provision that would allow the stockholders of a firm that is taken over by another to buy shares in the second firm at a reduced price. Yan. Concepts lang, no? Ano ba yung mga ginawa ng ibang companies para maiwasan yung mga ganyang takeovers? Ano yan? Okay, ito. Managers' moves to make takeovers more difficult have been countered by stockholders, especially large institutional stockholders. May question si April. Recorded na siya, April. Dito tayo nagre-record sa OBS Studio. Okay, upload natin to sa canvas nyo. Ayan. Ayan nga, kina-counter siya ng stockholders, especially yung large institutional stockholders. Sino ba yung mga yan? Yung mga big time, mga big fish na investors who do not like barriers erected to protect incompetent managers. Then dyan, nagbigay na example, yung California Public Employees Retirement System. Okay. Tapos ito, managers' pay is another contentious issue. It has been asserted that in some cases, CEOs receive excessive compensation because they are too closely aligned with the company's board of directors. Okay. So ito pwede mong basahin yung examples na yan. Self-explanatory naman siya. Okay, pinakita lang dito yung mga scenario na pwedeng mangyari sa totoong buhay, no? Yung mga takeovers and yung ginagawa ng companies para maiwasan yung takeovers na ganyan. And kung paano sila kinokontra ng majority stockholders. Kasi syempre, kapag incompetent yung management, mas gugustuhin ng stockholders na magkaroon ng takeover by a more competent management. Syempre, investment nila yung nakasalalay doon. Okay, kung incompetent yung management and may provision nga na hindi sila pwedeng basta-basta palitan, ma-hurt naman yung investment ng stockholders. Okay. Syempre, ang gusto ng stockholder ay yung best na scenario para sa lagay ng investments niya, no? Para kumita instead of mag-loss. Okay. And yan nga. Yung examples, pwede mong basahin dito sa book natin. Okay. So, yun yung unang, right, control of the firm. Next natin, yung preemptive right. Alam mo na rin to, no? Yung concept ng preemptive right. Common stockholders often have the right, called the preemptive right, to purchase on a pro rata basis any additional shares sold by the firm. Okay, basahin mo lang din to, no? A provision in the corporate charter or bylaws that gives common stockholders the right to purchase on a pro rata basis new issues of common stock or convertible securities. So bakit ba? Bakit ba may preemptive right? Para hindi ma-dilute yung yung ownership ng isang stockholder. For example, nag-issue nga ng bagong shares, nag-issue ng additional shares yung company. Bago i-offer sa iba, aalok muna dun sa existing stockholders. Okay. And on a pro rata basis, pwede siyang bumili ng shares para ma-maintain yung percentage of ownership niya dun sa company na yun. Okay. Again, recap lang to nung mga alam mo na. Ayan. The purpose of the preemptive right is twofold. First, it prevents the management of a corporation from issuing a large number of additional shares and purchasing those shares itself. Okay. Second, and far more important, reason for the preemptive right is to protect stockholders from a dilution of value. Okay. Ayan, may example ulit na binigay dyan. Yan. Pwede mong basahin on your own. Self-explanatory naman ito. Okay. Tapos ito, types of common stock. Ito medyo, siguro medyo bago sa'yo. Ayan. May types pa pala ang common stock. Although most firms have only one type of common stock, in some instances, classified stock is used to meet special needs. Excuse me. Generally, when special classifications are used, one type is designated as Class A, another Class B, and so forth. So, dito binigay example na si Google. No? For example, when Google went public, it sold Class A stock to the public, while its Class B stock was retained by the company's insiders. Okay, so yung Class A daw binenta sa public, yung Class B retained by the insiders. Okay, the key difference is that Class B stock has 10 votes per share. Okay, while the Class A stock has 1 vote per share. So, ibig sabihin, mas malaki yung voting power ng Class B stock kaysa dun sa Class A stock. Okay. Yeah. The use of classified stock thus enables the company's founders to maintain control over the company without having to own a majority of the common stock. Okay. Ibig sabihin, pwede silang mag-issue ng maraming shares of stock sa public, pero yung majority ng voting rights nasa kanila pa rin, kahit mas konti yung hawak nilang shares. Kasi, Yung hawak ng public ay Class A, containing 1 vote per share lang. And yung hawak naman nila as founders o insiders ng company is Class B stock na may 10 votes per share. Okay, so kahit mas konti yung hawak nila na shares, nasa kanila pa rin yung majority ng voting rights. Okay, and saan nga ginagamit yung voting rights? Dito, no? Sa voting. Okay. Okay. Ayan. So, ayun. Classes of o types of common stock. Tapos dito may example ulit sa baba. Ayan. Si General Motors naman, ano? Ayan. For example, when General Motors acquired used aircraft for 5 million, it paid in part with a new Class H common. Okay. May Class H naman si General Motors, no? Or GMH, which had limited voting rights and whose dividends were tied to use performance as a GM subsidiary. So the reasons for the new stock were that GM wanted to limit voting privilege on the new classified stock because of management's concern about a possible takeover, and the employees ng subsidiary wanted to be rewarded more directly on its performance. Okay. So ano ba kasi yung Class H na common stock na yan? Tied kasi yung dividend payout nito sa performance mismo nung subsidiary. Okay. So dito, example lang naman yan ng iba pang types ng common stocks. Then yan, sinabi naman dito na note that Class A, Class B, and so forth have no standard meanings. Most firms have no classified shares, but a firm that does could designate its Class B shares as founder shares and its Class A shares as those sold to public. So malaya sila kung ano ba yung gusto nila dyan. Okay. Ayan. Pero yon at least alam mo na, no, na may ganitong mga scenario sa totoong buhay. Okay. Hindi pala basta common stock na. Mayroon pa palang iba't ibang types. And yan, containing different, so let's say for example nga, yung number of voting rights. Okay. So puntahan natin itong stock price versus intrinsic value. Okay. Hindi pa ba nalalagaw itong call ko? Hindi pa naman. Ayan. So, ito nga na-discuss na sa chapter 1, no? We saw in chapter 1 that a manager should seek to maximize the value of his or her firm's stock. In that chapter, we also emphasized that the difference between stock price and intrinsic value. Okay, ano ba yung pinagkaiba ng stock price sa intrinsic value? The stock price is simply the current market price, and it is easily observed for publicly traded companies. So, yung nakikita mo dito, so, lagay lang natin dito sa 6-pack, no? Ito pala, callfinancial.com, para do sa mga gustong mag-trade ng ano dyan, no? Sa stock market. Madali lang gumawa ng account dito. Okay, kung may time ka pa, no? Kung hindi ka pa masyadong busy sa pag-aaral mo, pwede mong pag-aralan to. And ayan, mag-trade ka, baka sakali, no? Baka sakaling ito pala yung para sa'yo. Baka kumita ka dito. Okay, ayan. So, yung makikita mo nga dito, let's say, dito sa example natin, Jollibee, JFC, traded siya sa public, no? And makikita mo dito, yung kulay green na yan, yan yung market price ni Jollibee, JFC. So, yan ba itong stock price? Yes, yan. The stock price is simply the current market price. And it is easily observed for publicly traded companies. So, yung nakikita mo nga dito, yan yung stock price, market price. Okay. So, M-wide, yan, 6.17. ASEN, 10.84. Ayan, ano pa ba? Ang mga nandito. SEB, 39.3. Dito, 7.88. So, yung mga nakikita mo dyan, yan nga yung stock price. Okay. Pwede mo rin makita dito, no? Sa Instagrams naman or kung anumang platform, yung paggalaw ng stocks. o ng stock prices. Ayan, si Jollibee, green siya ngayon, no? Green yung candlestick ni Jollibee today. Ayan. Pero, alas 3 na ng hapon, so close na yung market. Hindi mo na makikita yung paggalaw nito. Okay. Pero at least, ayan, nakita mo na ano ba yung stock price. Yan, yung makikita mo sa stock market. By contrast, intrinsic value, which represents the true value of the company's stock, cannot be directly observed and must instead be estimated. Okay. Figure 10.1 illustrates once again the connection between stock price and intrinsic value. So itong figure kasi na to, present na siya sa chapter 1, no? Kung tama yung pagkakatanda ko. And ayan, managerial actions, the economic environment, taxes, and political climate. Okay. Tapos yung true investor cash flows and true risk, yan yung magde-determine dun sa intrinsic value ng stock. And yung perceived investor cash flows naman and perceived risk, yan yung magdidictate ng market price. Okay? So, itong intrinsic value nga, not readily available. So, kino-compute natin to based dun sa estimates, no? Using the available data sa atin. Okay? Ayan. So, kino-compute ang intrinsic value. And yung stocks market price, available dito sa stock market. Makikita mo siya. Okay. Kapag naging equal yung intrinsic value ng stocks and yung market value ng stocks or market price ng stocks, mag-i-exist yung market equilibrium. Okay. Pero, madalas bang nangyayari yan na in equilibrium yung stock price? So, hindi natin masasabing madalas, no? Kasi, yung ginagamit na estimates dito ay yung mga yung information na gagamitin mo for estimates, hindi naman lahat available sa public. Okay? So, halimbawa, investor ka na wala ka dun sa loob mismo ng company. So, hindi mo alam kung ano ba yung mga pwede mong gamitin na factors to consider in computing the intrinsic value. Okay? So, hindi mo masasabi na tama yung yung estimate mo no intrinsic value kasi maraming factors na pwedeng i-consider dyan. Okay? Basahin natin to. As the figure suggests, market equilibrium occurs when the stock's price equals its intrinsic value. If the stock market is reasonably efficient, gaps between the stock price and intrinsic value should not be very large and should not persist for very long. However, in some cases, an individual company's stock price may be much higher or lower than its intrinsic value. So dito nagbigay ng example, no? During several years leading up to the credit crunch of 2007 to 2008, yung crash ng stock market, no? Most of the large investment banks were reporting record profits and selling at record prices. Ibig sabihin, mataas yung stock price nila, no? Okay. However, okay, ano yung mataas sa kanila? Yung price dito, no, sa stock market. They are trading at high prices, no? However, much of those earnings were illusory because they did not reflect the huge risks that existed in the mortgage-backed securities that these firms were purchasing. So, with hindsight, we now know that the market prices of most financial firms' stocks exceeded their intrinsic values just prior to 2007. Ibig sabihin, overpriced yung stock nila, no? Kasi nga intrinsic value nila hindi nagre-reflect do sa stock price nila talaga. Ngayon, when the market realized that it was happening, those stock prices crashed. Okay. Ayan, tapos binigay examples dyan. Okay. It clearly pays to question market prices at times. Okay. So, yun yung pinagkaiba ng intrinsic value and stock prices. Again, intrinsic value, Ine-estimate yan. Stock price, dictated by perceived investor cash flows and perceived risk. Makikita mo nga siya dito sa stock market. Ayan. So, dito, makikita mo rin yung bid price and offer price. So, itong bid price, ito yung price na willing bayaran ng buyer. So, dito merong volume na 107,410 number of shares na ready bilhin yung buyer for 195.9 per share. Then, may seller naman na willing mag-offer ng 20 shares for 196 per share. Kapag nag-match yung dalawa na yan, yung bid price and offer price, ibig sabihin, papasok yung order nilang dalawa. Yun yung magiging stock price. Okay. Ayan. So, ito. Why do investors and companies care about intrinsic value? Yan, basahin natin to. The remainder of this chapter focuses primarily on different approaches for estimating a stock's intrinsic value. Before these approaches are described, it is worth asking why it is important for investors and companies to understand how to calculate intrinsic value. Okay. Ayan. When investing in stocks, one's goal is to purchase stocks that are undervalued. Okay, that is, the price is below the stock's intrinsic value. So, sana hindi ka na nalilito, no? Intrinsic value, yan yung based doon sa estimate. And pag sinabi yung price, yan yung stock price dito. Okay? Undervalued ang stock kapag yung price niya is below the true value o yung intrinsic value. Yun, parang at a bargain, pwede mong bilhin, no? For example, ang intrinsic value pala ng Jollibee is 300 pesos per share. And yung price niya ngayon, 195.9 lang. Okay. Magandang deal ba yan? O attractive ba yan? Yes, no? Kaya bibilin mo yan para kang bumili at bargain. Ano? Kasi nga, undervalued yung stock. Yun nga, ang goal ng investors, ano? Purchase stocks that are undervalued. Tapos, avoid stocks that are overvalued. Yung, baligtarin mo lang yung concept natin. Consequently, Wall Street analysts, institutional investors who control mutual funds and pension funds, and many individual investors are interested in finding reliable models that help predict a stock's intrinsic value. Investors obviously care about intrinsic value, but managers also need to understand how intrinsic value is estimated. Okay, so bukod daw sa investors, pati yung managers, kailangan din niyang maintindihan. Okay. Paano ba na-value yan? Okay. Ayan. First, managers need to know how alternative actions are likely to affect stock prices. Okay. Second, managers should consider whether their stock is significantly undervalued or overvalued. Okay. And yan nga, yung two models na pwede natin gamitin dito sa pag-estimate ng intrinsic value is yung discounted dividend model, di-discuss natin later, and yung corporate valuation model, di-discuss natin next meeting. Okay. The dividend model focuses on dividends, yan, from the name itself nga, no? While the corporate model goes beyond dividends and focuses on sales, cost, and free cash flows. So ito, mas maganda kung i-review mo na rin, no, yung free cash flow formula natin. Sana naalala mo pa. O sana nandyan pa sa index card mo, no? Okay. Ito na, makikita mo na yung purpose ng index card kung bakit pinag-prepare ko kayo no previous semester natin, no? Kasi nga, kapag babalikan mo to sa libro, mahirapan ka hanapin yung formula ng free cash flow na yan. Okay? Marami kang bubuklatin. Kung nilagay mo sa index card mo, sobrang dali lang. Okay. Mas konti yung pages na bubuklatin mo. Okay. Ayan. Okay. So ito, self-test. What is the difference between a stock's price and intrinsic value? Stock price, yan. Makikita mo rito sa stock market o dun sa mga platforms na pwede kang mag-trade. And intrinsic value, Yan naman yung based on estimate. Why do investors and managers need to understand how to estimate a firm's intrinsic value? Investor, syempre gusto nilang bumili ng undervalued and iwasan yung mga overvalued na stocks. Managers naman, more mas more on decision making purposes. Syempre kailangan ayan, they should consider kung undervalued and overvalued na ba bago gumawa ng decisions. And what are the two commonly used approaches? Yun nga, no, yung dividend model and yung corporate model. Okay. So, bago tayo pumunta dito sa dividend discounted model, baka may questions ka. Unmute ka lang or raise ka ng hand. Inom lang ako ng tubig. Okay, mukhang walang questions. Okay, tuloy natin, no? Tuloy natin. Discounted dividend model. Okay. The value of a share of common stock depends on the cash flows it is expected to provide. Okay. So, same concept, no? Nung sa bond valuation. Paano ba natin bina-value? Pina-present value natin yung interest payments, pati yung par value ng bond. Okay. So, ganun naman yung ginagawa natin, no? To value stocks din. The value of share of common stock depends on the cash flow it is expected to provide. And those flows consist of two elements. Una, dividends the investor receives each year. Okay. Pangalawa, yung price received when the stock is sold. Okay. So, yung price na yan includes original price paid plus an expected capital gain. Okay. So, halimbawa, bumili ako ng Jollibee stocks noong May 17, 2021. Ayan, magkano price nung May 17? Ayan, nasa around 170, no? Ayan, so hindi natin makita ng maayos. 168. Okay, so halimbawa, 168, binili ko yan. Then, nabenta ko noong, kailan ngayon? September 22, kanina. Nabenta ko siya, let's say, 195. So, umangat na yung price niya, no? Okay, nung binili ko, tsaka nung nabenta ko. Ang tawag doon, capital gain. Okay? So, ayan. The final price includes the original price paid plus an expected capital gain. Okay. Keep in mind that there are many different investors in the market and thus many different sets of expectations. Therefore, investors will have different opinions about a stock's true intrinsic value and thus its proper price. The analysis as performed by the marginal investor, whose actions actually determine the equilibrium stock price, is critical. Okay, but every investor, marginal or not, implicitly goes through the same type of analysis. Okay, balikan lang din natin yung definition nitong marginal investor, no? Dinaanan natin to last sem. A representative investor whose actions reflect the beliefs of those people who are currently trading a stock. Okay, it is the marginal investor who determines a stock price. Okay. Tapos punta tayo dito sa terms na ginamit sa formulas na makikita mo sa mga next pages. Okay, ang dami, no? Ang dami. Medyo malulula ka dyan. Pero, yan. Isa-isayin natin. D sub T o DT na lang. Okay. It's the dividend a stockholder expects to receive at the end of each year. T. Okay. So, yung D0 is the last dividend the company paid. So, yung pag sinabing D sub 0, so D, yung dividend at time 0 o yung the last dividend the company paid. Okay. Paano naman yung D sub 1? Ayan. The first dividend a new buyer will receive is D sub 1. Okay. So, yung mga sub dyan, yung mga tawag dito, subscript. Okay. Yan yung time lang, no? Yung year T or yung period. Okay, and so forth. So, yung D sub 2, yan naman yung marireceive at the end of year 2, and so on. Okay, D sub 0 is known with certainty kasi nga, bayad na yan, no? That is the last dividend paid. Okay. And itong D sub 1, D sub 2, and all other future dividends are expected values. So, estimate lang yan. Our primary concern is with D sub T as forecasted by marginal investor. Okay, so yun yung unang term dito, yung D o yung dividend. Next natin, yung market price. Okay, yung P sub 0. Actual market price of the stock today. Okay, kasi nga, sub 0. So, para mas maintindihan mo, pwede siguro tayong gumawa o mag-drawing ng timeline dito. Okay. So, yan. Try natin ulit gumawa ng straight line. O, yan. Medyo hindi straight, no? Okay. Kapag medyo nahihirapan kang mag-analyze ng problems, pwede ka naman mag-drawing nito. Wala namang mag-judge sa'yo, ano? Drawing ka ng timeline. So, dito yung time 0, time 1, time 2, 3, 4, 5, 6, and so on. Okay, so yung D0, yan yung last dividend paid. Yung P0, yan yung price today. Okay, so yung dividend naman na marireceive dito, D sub 1, and yung price dito, P sub 1. Okay. Okay, yan nga, no? P sub 0, market price of the stock today. P0 is known with certainty, but predicted future prices are subject to uncertainty. Okay. Next natin, P hat T. Okay, nakita mo may parang ano ba tawag dyan? Caret ba? Caret. Iyan. P hat T. Okay, yung ganito. Medyo hindi yata kita dito sa libro. Ayan, pero burahin natin yung highlight. Pwede bang mabura yung highlight? Remove highlight. Ayan. P hat T ang tawag dyan. Both the expected price and the expected intrinsic value of the stock at the end of each year T. So, P sub T nga. Okay. Okay. P hat T, basahin yan. Ang tandaan mo na lang, no? Kapag may hat, expected. So, kagaya dito. Meron ka pa ulit makikita dyan. R hat S, expected rate of return. Pero mamaya na lang, ano. Pag may hat, expected. Okay. P hat T is based on the investor's estimate of the dividend stream and the riskiness of that stream. There are many investors in the market, so there can be many estimates for P hat T. Pero yan pa rin, si marginal investor pa rin ang magdidictate. Okay. Next natin, G o yung growth rate. Okay. The expected growth rate in dividends per share. So, yan. If dividends are expected to grow at a constant rate, G should also equal the expected growth rate in earnings. Okay. And the stock's price. Different investors use different Gs to evaluate a firm's stock, but the market price is based on the G as estimated by marginal investor pa rin. Okay, tandaan mo lang yung mga terms muna, no? Meron na tayong dividend. Meron tayong price. Okay. Meron tayong growth rate. Next natin, yung required rate of return. R sub S, required or minimum acceptable rate of return. Okay. On the stock, considering its riskiness and the returns available on other investments. Different investors typically have different opinions, but the key is again the marginal investor. Okay. So, next natin, R hat S, expected rate of return. Okay. That an investor believes the stock will provide in the future. The expected return can be above or below the required return, but a rational investor will buy the stock if the expected return exceeds the required rate of return. Sell the stock if the expected is less than the required, and simply hold the stock if these returns are equal. Okay. Parang sa una, ma-overwhelm ka, no, sa dami ng mga terms na yan. Pero mamaya, tingnan natin yung sample problem dito sa libro mo. Madali lang naman siya sundan. Ito naman, R bar S. Okay. Meron naman siyang guhit dun sa taas, no? Ito naman yung actual or realized rate of return. Okay. Next natin, dividend yield. Okay. Ito may formula na, no? Pwede mo na isulat sa index card mo. Dividend yield formula. Dividend yield. Sulat lang natin dito, no? Dividend yield is equal to D sub 1 over P sub 0. Okay. Ito over ito. Okay. Sulat mo na sa index card mo. Dividend yield. Actually, dapat pati itong mga nabanggit natin dito. Sinulat mo na. Okay. Para madali mong mabalikan. Uy, nawala yung paint. Okay. Sinulat mo na? Very good. Okay. Ano ba ibig sabihin ng dividend yield na yan? Basahin natin. Dividend yield, okay. The expected dividend divided by the current price of a share of stock. So, dito may example. If company X's stock is expected to pay a dividend of $1 during the next 12 months, and if X's current price is 20, compute for the dividend yield. So, madali lang, no? Dividend expected over the current price ng stock. Magkano yun? $1 divided by $20, 5% yung dividend yield. Okay. Marginal investor pa rin is the key. Okay. Next natin, formula ulit, no? Capital gains yield. Isulat mo na rin sa index card mo. Okay, nasaan yun? Ayan, capital gains. Is equal to, okay, P hat 1 minus P0 over P0. Okay. Sinulat mo na? Very good. Okay. So, ito, kung titingnan mo, no, yung P sub 1 minus P0, yan lang yung naging change do sa price, no? So, bali parang change in price over price nung beginning. Okay. So, yun nga. Capital gains yield. So, tinignan mo lang kung magkano ba yung capital gains. Dinivide mo dun sa price. Okay. Capital gains yield, basahin natin. The capital gain during a given year divided by the beginning price. So, dito may example ulit. If the stock sells for $20 today, and if it is expected to rise to $21 next year, so 21 yung P sub 1 mo, yung P hat 1, minus P0, which is 20. So, meron kang $1, no, na expected capital gain. Okay. So, 21 nga. Ayun yung ma-highlight ng siya lang. Okay, yun. So, $1 yung capital gain mo. And the expected capital gain yield will be $1 divided by the current price. So, yung P sub 0. 1 divided by 20, 5% ulit. Yung capital gains yield. Tapos ito na. Expected total return. Yan. Simple lang, no? expected dividend yield plus expected capital gains yield. So pag-a-addin mo lang silang dalawa. 5% plus 5%, 10% yung expected total return. Okay. Di ba ang ganda ng definition niya dito? No? Expected total return, tingnan natin yung definition. Expected total return. Okay, ganun siya ka self-explanatory. Okay. Sinulat mo ba yan sa index card mo? Very good. Okay. So, ayan, para mas maintindihan natin. Tingnan natin yung mga concept clip dito sa baba. Alam ko 3 to. 3 lang ba? Okay, 3 nga. So, tingnan natin ha. Ayan, play natin tong isa. Kaya lang, share din pa yung audio ko. Okay, try lang natin ha.
Discounted dividend model. This deals with a fundamental question in finance. What is a stock worth? Well, it's actually kind of simple, really. The only value a stock really has is its ability to generate cash for the shareholder. Now, all of this money doesn't come at once. It's spread out as regular dividend payments that the company pays the shareholders quarter after quarter, year after year. So to figure out how much a stock is worth today, all we have to do is figure out how much all those dividend payments are gonna be and discount them back to their present value. So that's where we get the name, the discounted dividend model. Now, the big problem here is that all those dividend payments happen in the future. That means we don't know for sure what's going to happen, so how do we come up with these figures? Well, we have to make a few assumptions. First, how many dividend payments are we talking about? Well, the company could go on for 100 years or more, or it might be wiped out tomorrow by a giant rampaging creature from the deep. Since there's no way to know, we make the somewhat optimistic assumption that the company will be around basically forever. So we're dealing with an infinite number of dividend payments. Okay, so that answers how many. Now, how do we decide how big each of those dividend payments is? To answer this, we look at the company's history and likely future performance to come up with a growth rate that determines how much the dividends are expected to change each year. Finally, we need to know how much we're going to reduce the value of those future payments so we can figure out their present value. So we collect a bunch of details like the stock's riskiness and what we think interest rates are going to do, add in a healthy dose of mathematics, and finally sprinkle in just a pinch of forbidden dark magic to come up with a required rate of return. This serves as our discount rate.
Ay, walang sounds. Okay, hindi ko pala na-click. Oo nga, no? Sorry. Click natin ulit. Okay. Akala ko napindot ko. Yan. Play natin ulit, no? Thanks do sa mga nag-inform. Okay. Ulitin natin. Yan.
Discounted dividend model. This deals with a fundamental question in finance. What is a stock worth? Well, it's actually kind of simple, really. The only value a stock really has is its ability to generate cash for the shareholder. Now, all of this money doesn't come at once. It's spread out as regular dividend payments that the company pays the shareholders quarter after quarter, year after year. So to figure out how much a stock is worth today, all we have to do is figure out how much all those dividend payments are gonna be and discount them back to their present value. So that's where we get the name, the discounted dividend model. Now, the big problem here is that all those dividend payments happen in the future. That means we don't know for sure what's going to happen, so how do we come up with these figures? Well, we have to make a few assumptions. First, how many dividend payments are we talking about? Well, the company could go on for 100 years or more, or it might be wiped out tomorrow by a giant rampaging creature from the deep. Since there's no way to know, we make the somewhat optimistic assumption that the company will be around basically forever. So we're dealing with an infinite number of dividend payments. Okay, so that answers how many. Now, how do we decide how big each of those dividend payments is? To answer this, we look at the company's history and likely future performance to come up with a growth rate that determines how much the dividends are expected to change each year. Finally, we need to know how much we're going to reduce the value of those future payments so we can figure out their present value. So we collect a bunch of details like the stock's riskiness and what we think interest rates are going to do, add in a healthy dose of mathematics, and finally sprinkle in just a pinch of forbidden dark magic to come up with a required rate of return. This serves as our discount rate, how much less those future dividend dollars are worth than if we had cash in hand today. Phew! Didn't we say this was simple? Well, anyway, once all those questions are answered and we've got our nice little set of variables all collected, the rest is pretty straightforward. Plugging it all into a spreadsheet, we can easily calculate how much cash the stock will likely generate, discounted back to its value in today's dollars. This number tells us what the stock's price should be, and we can compare that to its actual current price to determine whether it's better to buy, sell, or hold the stock. And that's how we figure out how much a stock is worth, using the discounted dividend model.
Okay? Medyo pumiyok pa ako, no? Ayan. So, yun nga, no? Pinakita niya lang kung paano ba ginagawa yung pagdi-discount ng dividends. Ano? And paano i-estimate yung future dividends. Kasi nga, ano lang ba yung meron tayo dito? D0, no? Yun yung actual dividend na huling binayad. Paano natin i-estimate yung future dividends? Okay, kailangan natin yung growth rate. Ayan. Tapos, yung rate of return, ano? Kung ano yung gagamitin nating pang-discount dun sa dividend na yun. Okay. Ito, dividend yield versus capital gains yield. Nakashare pa rin ba yung audio? Ayan.
Dividend yield versus capital gains yield versus total return. These are three components of the discounted dividend model. That's a framework for figuring out what a given stock is worth. It looks at two things: how much you'll actually get paid each year by the company for holding the stock, and how much the price changes annually. Okay, let's start with that first part, what's called the dividend yield. What we want to know here is how much of a return are we getting from the dividends the company's paying us for 1 year. To figure this out, we take the dollar amount of the year's dividend payments, that's D1, and we divide it by the price we paid for the stock at the beginning of that year, P0. For example, BizCorp is expected to pay dividends totaling $1 per share next year, so we'll put that in the numerator. And their stock is currently trading at $50 per share, so that goes down in the denominator. Denominator, what a weird word. It sounds like some kind of evil cyborg sent from the future to wipe out mankind's only hope for freedom.
This isn't supposed to be a movie trailer?
Sorry, just got a little carried away there.
Okay, let's try it again. Take 2.
So anyway, that means their dividend yield would be 1 divided by 50, which comes out to 0.02 or 2%. But that's only one part of the total return. We also have to look at the capital gains yield, how much the stock's price has changed each year. This section, P hat 1 minus P0, is just the expected change in price from now to 1 year in the future. And we divide that value by the current price. Let's look at how this works for BizCorp. We can buy a share today for $50, and we expect the price to go up to $55 in a year. So the change in stock price is $55 minus 50, or $5. And we divide that by today's price of $50, which comes out to 0.1, or 10%. That's our capital gains yield. And the last part is easy. To get the total return, we simply add the dividend yield to the capital gains yield. BizCorp had a 2% dividend yield and a 10% capital gains yield. So the total return for hanging onto their stock for 1 year is 12%. So remember, according to the discounted dividend model, your total return is the sum of the dividend yield, the percentage of a stock's price you'll get paid by the company in dividends each year, plus the capital gains yield, the annual percentage of a stock's change in price. That's the relationship between dividend yield, capital gains yield, and total return.
Ayan. Dividend yield, capital gains yield. So, na-explain na rin naman natin kanina, no? Kaya lang baka mas trip mo yung English. Ayan. May English naman dito na discussion. Okay? May drawing pa, no? Meron pang denominator. Okay, next natin. Ito, expected versus required versus realized rates of return. Okay, play na lang din natin to, no? Para hindi masayang yung natin. E-book. Okay? Para sulit.
Expected versus required versus realized rates of return. When we talk about rates of return, things can get pretty confusing because what seems like a simple term actually has a lot of different meanings. Let's look at 3 variations. First off, there's the expected rate of return. Its symbol is an R with a little caret on top of it, giving it the nickname R-hat. But apart from its fashion sense, what you need to know about the expected rate of return is that it's a statistical calculation, what we think will happen with the value of a stock in the future. It's based on a range of possibilities, from the best case to worst case scenarios, as well as the relative likelihoods of coming true. It's what we expect will happen in the future, so it's the expected rate of return. Then there's the required rate of return, with the simple symbol of a lowercase r. Now, the required rate of return is all about a stock's riskiness. Remember that investors are averse to risk. They don't like it. It's something they want to avoid. So if you want to sell a stock with a lot of risk, you're going to have to provide a higher return to get anybody to buy it. By comparing a given stock's riskiness to the volatility of the overall market, we can figure out just how much of a return an investor requires to make it worth their while. That's the required rate of return. And finally, there's the realized rate of return. This one is denoted by an R with a straight line on top, and it's pronounced R-bar. So if everybody's least favorite Star Wars character was looking at the realized rate of return on his investment in a super compact automobile, we'd call it Jar Jar's Smart Car R-bar. I know, har, right? Anyway, this rate of return is different from the others because it isn't a speculation about the future or the result of a calculation. It's the actual amount of return you get from a stock. So this is something you can only see in hindsight. You only find out or realize what it is once it's already happened. Think of it as an historical record of what really happened with a stock's value in the past. So be careful when you're dealing with rates of return. Depending on the context, whether you're talking about expected rates of return, required rates of return, or realized rates of return, it can mean very different things.
Ayan. Okay. Expected, required versus realized rates of return. Okay. Nasa pangalan din naman, no? Nasa name na nila mismo, yung definition nila. Kaya hindi ka naman siguro malilito dyan. Okay. Ayan. So, pupunta na tayo dito. Computation, no? Expected dividends as the basis for stock values. Excuse me. Wait. Inom lang ako ng tubig, guys. Okay. Ayan. In our discussion of bonds, we used equation 9.1 to find the value of a bond. So, ito yun, ano? Pero, hindi ito yung ginamit natin since familiar sa'yo yung ibang present value formula, no? Kasi dito parang iba yung presentation niya, pero same din naman yan. Okay. So, yun din yung gagawin natin dito sa stock valuation. Okay. Stock prices are likewise determined as the present value of a stream of cash flows, and the basic stock valuation equation is similar to the one for bonds. Okay. What are the cash flows that a corporation will provide to its stockholders? Ayan, yung dividend at saka yung price ng bond, price ng stocks na pagbibilhan, ano, yung pagbebentahan natin. Okay. Ayan, you intend to hold it forever. In this case, you will receive a stream of dividends and the value of the stock today will be calculated as the present value of an infinite stream of dividends. So ito, value of stock, sulat mo na sa index card mo. Okay. Pero, medyo complicated pa to, no? Mamaya, papakita natin yung mas simpler na formula. Okay. So, ito yung formula kapag bumili ka ng stock tapos hinawakan mo forever. Okay. Yan. Paano naman daw kapag binenta mo? Okay, eventually. So, what about the more typical case where you expect to hold the stock for a finite period then sell it? What will be the value of P hat 0 in this case? Okay. So, ganun pa rin naman, ano? Okay. Unless the company is likely to be liquidated or sold and thus disappears, the value of the stock is again determined by equation 10.1. Ito pa rin yung gagamiting formula. To see this, recognize that for any individual investor, the expected cash flows consist of expected dividends plus the expected sale price of the stock. However, the sale price to the current investor depends on the dividends some future investor expects, and that investor's expected sale price is also dependent on some future dividends and so forth. So, pwede natin ipakita yung drawing natin kanina, no? Para ma-illustrate yung sinasabi dyan. So, limbawa, bumili tayo ng stock today. Nasaan yung cursor? Ayan. So, limbawa, bumili ka dito ng stock sa time 0. And then, hinold mo hanggang, let's say, year 4. Okay. Tapos, dito, binenta mo na siya. Okay. paano mo i-value yung stock? Una, ipe-present value mo muna, 'di ba? So halimbawa muna pala, ang gawin natin ang plan natin is to hold the stocks forever. So makaka-receive ka ng dividends infinitely. Okay. So halimbawa, dugtungan natin 'to no na 7, 8 and so on. Okay, 8. Bakit ganyan? Eraser. Brush. Okay, ganyan pala dapat. Infinitely. Okay. So, to value the stock daw, ipe-present value mo yung dividends na marireceive. Okay. So, ganun yung gagawin mo kapag plan mong i-hold forever yung stock mo. So, ipe-present value mo yan, lahat ng dividends dyan na ina-expect mong ma-receive. Paano naman kung binili mo nga yung stock sa time 0, tapos eventually binenta mo sa time 4? Paano mo siya i-value? Ganun pa rin, no? Present value pa rin ng mga future dividends na expected. Bakit? Okay, kasi, di ba, i-value natin yung stock natin based dun sa future dividends na marireceive and yung ultimate selling price natin. So, halimbawa nga, year 4, binenta natin. So, may marireceive ka dito na price. Okay. Ano ba yung magdi-dictate ng price sa year 4? Di ba, yung future dividends pa rin na marireceive? Okay, so dun pa rin tayo mag-boil down, no? Sa present value ng dividends. Okay, so halimbawa nga, binenta pa rin nung year 8. Okay, so ipe-present value mo yung selling price dito nung year 8. Ano ba yung nag-dictate ng selling price niyan? Future dividends pa rin nung year 8. Okay, so ipe-present value mo pa rin yung expected dividends. So yun lang yung concept na sinasabi dyan sa baba. Therefore, for all present and future investors in total, expected cash flows must be based on expected future dividends. Okay. Put another way, unless a firm is liquidated or sold to another concern, the cash flows it provides to its stockholders will consist only of a stream of dividends. Therefore, the value of a share of stock must be established as the present value of the stock's expected dividend stream. Ayan. So, tingnan natin tong self-test question. Explain the following statement. Whereas a bond contains a promise to pay interest, a share of common stock typically provides an expectation of but no promise of dividends plus capital gains. Okay. Sa bond kasi, contractual, no? Kailangan talaga bayaran yung interest. Okay. Sa sa stocks naman, hindi naman laging may dividend declaration, di ba? Okay. And yung capital gains, hindi rin naman sure yan. What are the two parts of most stocks expected total return? So, nakita natin kanina, no? Tas may video pa. Expected total return is the dividend yield plus the capital gains yield. So, pakita natin ulit yung formula nung dalawa. Natabunan pala. Pero ito yung dividend yield, sinulat mo naman sa index card mo. D1 over P0. Ito naman yung capital gains yield. P hat 1 minus P0 o yung capital gains, no? Divided by the P0 or current price. Okay, pag ipinag-add mo yung dalawa, yan yung expected total return. Okay, dito may problem, no? If D sub 1 is $2, okay. Mas okay siguro kung ang gagamitin natin na whiteboard dito is hindi yung paint, no? Try nating gumamit ng ibang sulatan. Ito, PDF. Okay. So, itong syllabus na lang. Okay, dito na tayo magsulat, no? Multi-purpose yung syllabus natin ngayon. Okay. Nasaan ka na? Share natin ulit. Ayan. So, dito tayo magsulat sa baba. Okay, nasa na yan? If D sub 1 is $2, so lagyan natin dito, no? D sub 1, uy. $2 daw. $2. And yung G, ano ulit yung G? Growth rate, no? 6%. G is equal to 6%. Tapos yung P sub 0 is $40. Okay. What are the stock's expected dividend yield, capital gains yield, and total expected return for the coming year? So, gamitin natin yung formula, no? Para makompute ito. Ang hinahanap, una, dividend yield, tapos capital gains yield, tapos total expected return for the coming year. Okay, ano ulit ang formula ng dividend yield? Dividend yield, sulat lang natin dito ulit, is equal to D sub 1 over P0. Okay, solve natin ngayon. Ano yung D sub 1? $2. Ano yung P0? 40. Okay. 2 divided by 40 is 0.05 or 5%. So, ito ba yung nahanap natin? Dividend yield? Yes, ayan, 5%. Next natin, capital gains. Capital gains yield. So, lagyan lang din natin yung formula ng capital gains yield dito. Ayan, capital gains yield, CGY na lang, is equal to P hat 1 minus P0 over P0. Okay. Given ba yung P hat 1? Hindi, no? Pero, pwede natin i-compute kasi meron tayong growth rate. Okay, paano natin gagawin yon? Yung P sub 0 natin, multiply natin by 1 plus growth rate, 1.06. Okay. So, bakit? Kasi ito yung hinahanap natin, no? Yung P sub 1 dito. So, i-move lang natin ng isa yan. And, gagamitin natin yung growth rate. Okay? So, try mo. 40 times 1.06. 42.4. Divided by, hindi pa pala muna. Yan yung P sub 1, no? Ayan. 42.4 minus 40 over 40. So, 42.4 minus 40 divided by 40 is equal to 0.06. Pansinin mo, 0.06 or 6%. Equal ba yan do sa growth rate? Yes. Okay, pero yan yun, ano? Capital gains yield, 6%. Tama ba yung nakuha natin? Yes, 6%. Sana sinusundan mo, no? Okay. Kung sinusundan mo, very good. And yan, expected return, total expected return, pag-aadin lang natin. 5% plus 6%, 11%. Okay, next natin, is it necessary for all investors to have the same expectations regarding a stock for the stock to be in equilibrium? Okay, tinatanong dyan, no? Kailan ba nagiging equilibrium ulit yung stock natin? Yung price ng stock natin? Kapag yung intrinsic value is equal dun sa market price. Okay. So, true ba yan? No. What would happen to a stock's price if the marginal investor examined the stock and concluded that its intrinsic value was greater than its current market price? So, ano daw yung mangyayari, no? Sa price ng stock, kung na-conclude na yung intrinsic value is greater than the market price. Ibig sabihin, mas mababa yung market price at a bargain, no? Pwedeng bilhin. Ibig sabihin, kapag ganyan, tapos nakita ng marginal investor, syempre, magbibilihan yan, no? Kasi nga undervalued yung stock. Kapag dumami yung bumibili, tumataas yung demand, mag-i-increase din yung price niyan and magiging close siya sa intrinsic value. Okay, so yun yung mangyayari sa stock price. Ayan, itong mga concept na to related sa earlier chapters pa. Pero yan, binalikan kasi dito, kaya balikan din natin. Okay, ito, constant growth stocks. Yan. Equation 10.1 is a generalized stock valuation model in the sense that the time pattern of D sub T can be anything. Okay, can be rising, falling, or fluctuating randomly. Equation 10.1 can be applied in any of these situations, and with a computer spreadsheet, we can easily use the equation to find the intrinsic value. However, it is not easy to obtain accurate estimates of future dividends. Still, for many companies, it is reasonable to predict that dividends will grow at a constant rate. In this case, equation 10.1 may be rewritten as follows. So, ito yung sinasabi ko, mas clear, no? Hindi masyadong complicated na formula. P hat 0 is equal to D sub 1 over RS minus G. Sulat mo na. Okay, sulat din natin dito. Burahin natin muna pala yung okay. Try lang natin. Ayan. So, sulat natin dito, no? Okay. P hat 0. Uy. Black dapat. Yan. Is equal to D sub 1 over RS minus G. Okay. Ayan. So, itong D sub 1, pwede siyang computein, ng ginagamit yung growth rate. Okay. D sub 0 times 1 plus growth rate. Okay. Ayan yung pinakita lang dito. Okay. Ayan. So, kung halimbawa, hindi given yung D sub 1, pwede mong hanapin, basta given yung growth rate. Ayan. So, the last term of equation 10.2, itong 10.2 equation na to, is the constant growth or Gordon model, named after Myron Gordon. Ayan. The term R sub S is the required rate of return, which is a riskless rate plus a risk premium. However, we know that if the stock is in equilibrium, the required rate of return must equal the expected rate of return, which is the expected dividend yield plus unexpected capital gains yield. So we can solve equation 10.2 for RS, but for now, using the hat to indicate that we are dealing with an expected rate of return. So R hat S is equal to, ito sulat mo na rin sa index card mo, D sub 1 over P sub 0 plus G. Again, pag may hat, expected. Okay, sinulat mo na? Very good. Okay. Tapos dito, may binigay na example, pero ang gamit niya Excel and calculator. So, skip muna natin to for now. Kasi bawal tayong gumamit ng scientific calculator. Ito kasi yung calculator approach. Yung financial calculator. Then Excel, lalo namang hindi natin pwedeng gamitin yan, no? Bawal ka magdala ng laptop sa board exams. Okay, dito tayo. Illustration of a constant growth stock. Okay. Table 10.1. Yan. Sa unang tingin, mukhang mahirap, pero madali lang yan intindihin. Yan, Table 10.1. Ang gamit niya rin dito, Excel, pero pwede natin gamitin yung basic calculator natin para sundan yung ginawa niya dito. Okay, ready na ba yung basic calculator mo? Very good. Ready ka na ba? Very good. Okay, tara. Let's go. Ayan, illustration of a constant growth stock. Yan nga. Table 10 presents analysis of allied food products stock. Okay. Part 1 in the upper left corner provides some basic data. Ito yung part 1, Ayan. So, yung given dyan, the last dividend which was just paid was $1.15. So, yan yung D sub 0, no? Okay, pwede nating ilagay dito ulit. D sub 0. Okay, medyo matatagalan yata tayo magbura, no? Okay. Ala, nakakainip. Panoorin tong pagbubura natin. Okay, ayan. So, yung allied food muna, no? D sub 0 is equal to 1.15. Tama ba? Oh, ayan. The stock's last closing price was $23.06. So, yung stock price, no? 23.06 daw. Okay. And it is in equilibrium. Based on an analysis of Allied's history and likely future, the analyst forecasts that earnings and dividends will grow at a constant rate of 8.3 per year. So, yung growth rate, 8.3% per year. And the stock's price will grow at the same rate. Moreover, the analyst believes that the most appropriate required rate of return is 13.7%. So, required rate of return, ilan ulit? 13.7%. Excuse me. Okay. Okay. Different analysts might use different inputs, but we assume for now that because this analyst is widely followed, her results represent those of the marginal investor. Okay. So, ito yung sinulat natin doon sa kabilang sheet, no? O tab. Ayan, yung given. Tapos, ito yung formulas na gagamitin. And yung examples, ayan. So, ang given na yon, yung D0 and P0 is for year 2015, no? So, year 2015. Ito. Okay, so, try natin tingnan or i-fill out itong year 2016 muna. So, magkano yung dividend ng year 2016? Okay, gamitin mo yung formula ng D sub 1, ano? D sub 1, yun nga ang gagawin mo, is equal to D0 times 1 plus growth rate. Simpleng-simple lang, no? So, yung D0 is 1.15 times 1 plus growth rate is 8.3%. Yung sabihin, 0.83. Okay. So, D sub 1 is equal to, sundan mo to, no? Para hindi ka malito. Ayan. 1.24545 or 1.25 na lang. Okay, same ba yung nakuha natin? Yes, ayun, no? Dividend noong 2016, 1.25. 1.25. Okay. Next natin kuhanin yung price noong 2016. Okay. Tanda mo pa ba yung formula ng price natin? Yung kasusulat mo lang. Yung D sub 1, okay, sana sinulat mo, no? Ito, yan. D sub 1 over RS minus G. Okay, try natin dito, no? Okay. P sub 0 is equal to D sub 1 over RS minus G. So, yung hinahanap natin dito is yung P0. Okay? Ito dapat yung makukuha natin, no? 23.06. So, try natin, ha? D sub 1 is equal to 1.24545 over yung RS natin, o yung required rate of return, 13.7%, minus growth rate na 8.3%. Try mo nga. 1.24545 over 0.137 minus 0.083. Ayan. P sub 0 is equal to 23.06. Okay. Tama naman. Nakuha natin, no? P sub 0. Okay. Saan ka na? Nasaan ka na? Sumobra ba tayo? Oo nga, sumobra. Okay, ayun yun, no? 23.06. Paano natin kukuhanin yung for 2016 na price? Kailangan natin gamitin yung D sub 2, okay? Which is yung dividend for 2017. Okay? So, pagka ang hinahanap na natin is yung P sub 1, burahin lang muna ulit natin to. Ayan, ang tagal talaga magbura. P sub 1 is equal to D sub 2 over RS minus G. Okay. So, hanapin muna natin yung D sub 2, no? Kasi D sub 1 pa lang to. Paano natin gagawin yon? Multiply mo lang ulit na 1 plus growth rate o 1.0383. So, 1.24545 times 1.083. Ang D sub 2 is equal to 1.3488. Yan na lang. Or 1.35. Okay, nakita mo ba yan? 1.35. 2017. Okay, tapos gamitin natin ulit yung formula nga. Over RS, which is 13.7%, minus G na 8.3%. So, solve natin to. Okay. 1.3488 divided by 13.7% minus 8.3%. Okay. 20. Tama ba to? 24.98. Okay. Ang nakuha ko is 24.9777. So, round off natin. 24.98. Yan ba yung price no 2016? Yes. Ayun. Okay. So, same din naman yung gagawin mo sa mga susunod na years, no? Kapag yung P sub 2 naman yung hanapin mo, yung price niya nung year 2. So, D sub 3 yung gagamitin. Okay. Ayan. Okay. Ayan. Tapos yung dividend yield and capital gains yield. So, try din natin gawin ulit, no? Ang formula ng dividend yield is D sub 1 over P sub 0. Nasaan ba yun nakalagay? Ito. Ayan. Dividend yield formula, D sub 1 over P sub 0. Okay, so halimbawa, yun nga. D sub 1 natin is 1.25 divided by 23.06 na P sub 0. 1.25 divided by 23.06. Ang dividend yield is 5.4. Okay, 1.25 over 23.06. Okay, so hindi kasi natin masulatan to eh. May ituturo sana natin using annotations. Kaya lang ayaw masulatan. Okay. Capital gains yield, yun nga. Yung capital gains divided by yung previous price. So, yung capital gain dito is yung 24.98 minus 23.06. Okay, 24.98 minus 23.06 divided by 23.06. Okay, 8.3%. So, ganoon lang naman, no? Tapos, ito-total natin para makuha yung total return. Ayan. Okay. So, simple lang, no? Nung ito yung ginamit natin na formula. Ito, pwede mo namang basahin on your own. Kaso kasi, yung approach na dito, Excel yung ginamit niya. Hindi siya gumamit ng basic calculator. Eh, yun nga ang goal natin, basic calculator. Madali lang din naman siya gawin. Through Excel. Formula mo lang yung Excel, drag mo lang. Mas mabilis siya gawin. Pero, ang problema nga, hindi natin pwedeng gamitin yun sa exams natin, lalo na sa boards. Kaya, mas maganda, masanay ka sa basic calculator. Okay. Then yun yan, next meeting, magkakaroon pa tayo ng iba example dito. So, i-integrate natin pati yung CAPM, ano? Kasi minsan yan, magkahalo. May bibigay na beta, risk-free rate, market rate. Tapos, saka mo hanapin yung price ng stocks. Okay, next meeting na lang natin yung pag-usapan. Okay. Baka pala may question ka rito. Okay. Kung hindi mo nasundan yung ginawa natin, raise ka ng hand or unmute ka. Okay. Inom lang ulit ako ng tubig, guys. Medyo nakakahingal. Okay, mukhang walang question, no? Ayan, so tuloy lang natin dito. Ito, medyo theoretical ulit. Ayan, dividends versus growth. The discounted dividend model shows that other things held constant that other things held constant, a higher value for D sub 1 increases a stock's price. Totoo ba yan? Kapag ba mas mataas yung dividend, nag-i-increase ba yung stock price? Check mo nga. Check natin Nag-i-increase yung dividend dito, 2017. Nag-i-increase ba yung stock price? Yes. Nag-i-increase nung 2018? Increase ba? Yes. Okay. So, true. However, equation 10.2 shows that a higher growth rate also increases the stock's price. Okay, but now we recognize the following. Dividends are paid out of earnings. Therefore, growth in dividends requires growth in earnings. Earnings growth in the long run occurs primarily because firms retain earnings and reinvest them in the business. Therefore, the higher the percentage of earnings retained, the higher the growth rate. Okay. So, kapag daw nag-increase tayo ng dividends, affected din yung growth rate. Kasi nga, saan ba nanggagaling yung growth? Kapag nag-reinvest tayo do sa business. Okay? And makakapag-reinvest lang tayo kapag yung dividend payout natin is hindi ganoon kalaki. Okay, so parang magkakaroon ng balance dito. Yan, pwede mo naman basahin din yung examples dyan. Yan. Ipinakita lang dyan yung relationship, Ayan. This demonstrates that in the long run, growth in dividends depends primarily on the firm's payout ratio and its ROE o yung return on equity. Again, tanda mo pa ba yung return on equity formula? Hindi na. Balikan mo sa index card mo. Makikita mo dyan yan. ROE is equal to net income over common equity, no? Yan. And last time, meron ka pa rin namang palatandaan. Kapag sinabing return, malamang net income yung numerator. And kung anong pangalan ng return, yun yung denominator. So, return on income, return net income over ano pangalan ng return on equity pala, no? So, net income over common equity. Okay. Ayan. So, ito. Which is better? Current dividends or growth? Ayan. We saw in the preceding section that a firm can pay a higher current dividend by increasing its payout ratio, but that will lower its dividend growth rate. Okay, so the firm can provide a relatively high current dividend or a high growth rate but not both. Okay, so pwede siguro natin i-drawing to, no, para mas maintindihan mo. Okay. Nasaan yung shapes? Ayan. So halimbawa kasi meron kang income na let's say 100,000. Oy, brush. Okay, halimbawa ito yung income mo, no? 100 US dollars. 100k US dollars. Okay. So, pwede kasing i-reinvest mo yan sa business or i-pay out mo as dividends. Okay? So, kapag ni-reinvest mo lahat yan, so, halimbawa, yung buong ito, ni-reinvest mo sa business mo, wala kang dividend is 0. Pero yung growth rate mo, mag-increase. Kasi nga, nag-reinvest ka eh. Okay? So, yung potential mo to earn, lalaki. no, ng business. Pero, paano naman kapag yung buong yan ay pini-out mo lahat as dividend? So, yung dividend mo, malaki. Pero yung growth mo, constant, ano? Hindi siya mag-grow. So, zero yung growth. Okay? So, pwede rin gawin naman is balance. Yung kalahati, i-payout as dividends. And yung kalahati is reinvest. So, magkakaroon ka ng dividend dito, hindi masyadong malaki. And mag-grow ka rin ng kahit pa paano. Okay, so yun yung concept dito Basahin mo lang dito. We saw in the preceding section that a firm can pay a higher current dividend by increasing its payout ratio, but that will lower its dividend growth rate. So the firm can provide a relatively high current dividend or a high growth rate, but not both. Okay, kasi nga, ayan, limited lang naman kasi yung pwede mong i-pay out as dividend or i-reinvest. This being the case, which would stockholders prefer? The answer is not clear. Ayan. As we will see in Chapter 16, some stockholders prefer current dividends while others prefer a lower payout ratio and future growth. So, depende, no? Kung ano yung gusto ni stockholder, no? Gusto niya bang kumita ngayon na? O okay lang sa kanya na ma-defer yung pagkita niya? And, ayan, sa long run, yung tinitingnan niya. Okay. So, dividend policy is an issue that management must decide on the basis of its judgment, not a mathematical formula. Logically, shareholders should prefer for the company to retain more earnings if the firm has exceptionally good investment opportunities. Okay. So, yan nga. Pagka daw tingin ni stockholder, maganda yung potential ni company, mas okay sa kanya na kahit hindi mo ko bigyan ng dividend, i-reinvest mo na lang. Okay. Ang titingnan ko dito is yung capital gains ko sa future. Okay. So, however, shareholders should prefer a high payout in dividends if investment opportunities are poor. Ayan. So, yan nga, no? The answer is not clear kung ano bang better, current dividends or growth. Depende yan. Okay. Then ito, required conditions for the constant growth model. Siguro hanggang dito na lang muna tayo, no? Medyo masakit na yung lalamunan ko. Okay, tuloy natin next meeting ito. Several conditions are necessary for equation 10.2 to be used. Okay. First, the required rate of return o yung R sub S must be greater than the long run growth rate. Bakit? Ano ba yung formula natin? Di ba? Dineduct natin yung RS minus G doon sa denominator, no? Okay. Yun yung formula natin, di ba? So, dapat daw, mas malaki yung required rate of return kaysa sa growth rate. Kasi, pag mas malaki yung growth rate, magiging negative yung denominator. Okay? O, yan. So, if the equation is used in situations where G is greater than required rate of return, the results will be wrong, meaningless, and misleading. So, ito, nagbigay na example, no? Ayan. If the forecasted growth rate in our example were 15 and thus exceeded the 13.7 required rate of return, stock price as calculated by equation 10.2 would be negative 101.73. That would be nonsense. Stocks can't have negative prices. Okay. Ayan. So second, the constant growth model as expressed in equation 10.2 is not appropriate unless company's growth rate is expected to remain constant in the future. This condition almost never holds up for new startup firms, but it does exist for many mature companies. Indeed, mature firms, nagbigay dyan ng example, are generally expected to grow at about the same rate as nominal gross domestic product. On this basis, one might expect the dividends of an average or normal company to grow at a rate of 5% to 8% a year. Note too that equation 10.1 is sufficiently general to handle the case of a zero growth stock. So, yung formula ay nasa baba. Ano ba yung zero growth stock? A common stock whose future dividends are not expected to grow at all. That is growth rate is equal to 0. Yan yung formula. P hat 0 is equal to dividends payout divided by the required rate of return. So, hindi na nilagay dito yung D sub 1. Ano? Kasi nga, constant naman yung dividend. Okay, kahit anong period, same siya. So, hindi na nilagay yung sub 1, sub 0, sub 2. Okay? So, yan. Simpleng formula. Lagay mo pa rin sa index card mo, syempre. Yan yung para sa zero growth stock. So, this is the same equation as the one we developed in Chapter 5 for a perpetuity. Naalala mo pa ba yung perpetuity? Yung may forever, no? Okay. And it is simply the current dividend divided by the required rate of return. Okay. So, ayan. Ayan. So, ito, dito na lang tayo mag-start next meeting, no? Valuing non-constant growth stocks. So, maiksi na lang naman to. Non-constant growth stock. Ayan. So, ibig sabihin lang, hindi, may period na iba't ibang growth rates yung gagamitin natin bago siya maging constant eventually. So, ganun pa rin naman yung concept. Ipa-present value lang natin siya using different growth rates. Okay. Then, next natin is ito, enterprise-based approach to valuation. Okay. Then, makikita mo dito yung ito, preferred stock. So, 10-8. Malapit na nga tayo matapos. Ayan. Preferred stock. Formula. Simpleng-simple lang din. No? Ayan. Parang formula din dun sa perpetuity. Pero ito, next meeting mo na siguro isulat. Then, ayan. Tapos na tayo. Dito sa stock valuation. Next meeting. Okay. Tapos mag-solve tayo ng problems para mas ma-practice ka. Okay. Ayan. So, may questions ka ba so far? Raise mo naman hand mo o meron. Or unmute ka. Ayan. 10-6 tayo. So, 1 hour and 42 minutes. Grabe naman yung limit ng lalamunan ko. Ayan. Siguro pag face to face naman hindi ganito ka tiring kasi at least may kausap ako doon. And magre-recite yung students. Ngayon kasi parang talaga monologue. Tanong ko, sagot ko. Sinulat mo na ba sa index card mo? Ako rin yung mag-very good. Ayan. Mukhang walang questions. Nagets ba? Madali lang naman yung formulas, no? Paki-raise naman yung hand kung nagets mo. Ayan. Si Joella. Si Maureen. Si Erica. Nagets nila. Okay. Si Catherine. Si Patricia. Si Irene. Diba? All girls yata yung umattend, Okay, so hanggang dito lang muna tayo today, no? Again, mag-upload na lang tayo ng solutions dun sa nakaraan natin na assignment.